Hi, this is Mike Maloney, and last week, my producer, Dan Rubach, sent me this story from Zero Hedge that U.S. tax receipts have never done this without a recession. And what they're talking about is falling to the low levels of growth. The U.S. federal tax receipts, it says, are rising at just 1.2% year over year. And this says tax receipts. I believe this could be a different chart. I've been looking at several charts. It may be mislabeled. This might be just federal government receipts like it says here instead of tax receipts. The slowing from the high back in 2013 of 13.4%. Well, it says here, while it's probably nothing, we thought readers might be interested to note that the last 6 times tax receipts, the growth was this week. It was at a level where the American economy was already in recession. And what you see here is that we're down at these very low levels, and at the beginning of each one of these recession bars, it was at a higher level than it is today, a much higher level. What I found interesting is on my web browser, I already had other tabs open, and some of them were for these exact topics. Federal government current tax receipts was one of them, but this is annual data, and it shows it's still growing quite rapidly. This was federal government current receipts. This is quarterly data. So this takes also not just taxes, but it takes into account the fees and the interest and any other source of revenue that the government has. But what I hadn't done was put it into the year-over-year format, the growth or the percent change year over year. And so here we have the percent change from a year ago, and this is very, very similar to the graph that was on the Zero Hedge article. However, our current rate of growth is just 0.97%. It's not the 1.2% that was presented in the Zero Hedge article. And again, with the beginning of each one of these recessions, we were talking about levels of growth that were far higher than this, closer to 3% or so. Here, wow, 4.6% when this recession began. This goes all the way back to 1948. And so what it shows is that it's not just the past 6 times, it's pretty much without exception. When the year-over-year growth in tax revenues falls this low, we have a recession in store. What's even more interesting is that last week, my topic was the change in the rate of growth of GDP. And I presented this chart, and I showed you how between each one of these economic expansions, the white areas, the average has been getting lower and lower and lower. And then this last economic expansion, they bought this economic expansion with $3.2 trillion of base currency creation. That Ben Bernanke, with the bailouts and the QE1, QE2, and QE3, created $3.2 trillion. And we had the weakest recovery on record, and it had already fallen to levels where all of these previous recessions had started at those levels or higher. And so when you put that together with this week's data coming from Zero Hedge, and this is the Federal Reserve's chart of total current government receipts, and it shows that those have shrunk to a level that is below where all the previous recessions have begun. Therefore, I am going to say that the recession is here, that we have already begun this recession, and that what will probably happen is with the end of this current quarter and the beginning of next quarter, sometime in the October-November timeframe, or the quarter following that, the January-February timeframe, they'll be announcing when this recession began. And recessions are always a trailing indicator. They need 2 consecutive quarters of bad economic news to announce a recession. So typically, it's a 6-month trailing indicator or greater. That's my opinion. Thank you very much for listening. If you got anything from this, please like it and share it and subscribe to our channel. We'll see you next time.